Mr. Mistry and Anurag has set up the context. As Mr. Mistry said that India is a place for the future, and Anurag said that CFO is a Chief Future Officer. I think that sets the context for our first discussion for the AI side. I'm happy to moderate that session. I think this AI is no longer only a back-end tool. I think it's the way it's emerging, it's becoming more and more on the forefront. And I'm sure at every board member and every board meeting, it's a part of the agenda and critical agenda for this. Because for the CFO, actually, it solves a lot of problems. One is that automating the lot of routine processes, and also to have a predictive future, more reliable and predictive future forecasting models, as well as on the managing the risk. And it brings the CFO to actually more at a front foot in terms of the setting the strategies and defining the analytics side of it. I'm happy to have a very esteemed panel members here. And I think let me start with, I will not start, Kumar, with the consulting side. Let me start with probably from Pulkit from automation. I think you sitting in the center and anyway from automation side of it, I think. So I think Pulkit, you come from an automation background and all this, and the kind of background you have. So tell me, what kind of organization structure should be put in place for regulatory readiness and ethical AI deployment?
Thank you, Anurag, for the question. Thanks also, Business World for having me over. Before I kind of try answer, let me, try simplify this. Most of the products or services that we use normally come with a user's manual. The problem with the AI, maybe not a problem, but I think the way it is designed or integrated, I think you don't really get to see how it operates. You kind of just go to that tool, mostly on the websites or apps, and kind of directly start using. What most of us ignore is, a very nice warning at the bottom, and we tend to click OK. And I must say that I don't just say OK. Most of the Indian websites don't give me a choice to disable some of the cookies. But what I'm trying to say by that is that it's extremely important to have code of conduct, how those things should be managed. And I can tell you from my personal experience, so I see basically the three major concerns, and then I'll come to how we kind of, or I try to apply it, to regulate. The first and the foremost is on the fairness, or some of us call it biases. Do we really know how the data is getting processed and what would be the final output that will come to me to make the decision? And let me take another example of, if I have to review a draft customer contract, and which is running into several thousand or hundred pages, am I directly relying on that artificial intelligence, to give me the final decision? Do I really know what all points or critical topics it may miss? The second issue is, of course, most common data protection and privacy. How that data is being kind of used, where is it sitting, eventually what's happening to that information, and so on and so forth. A third and the last is accountability. Imagine if something goes wrong with that tool, propped up with artificial intelligence, who's going to be accountable? So what I kind of normally try to do is, I think when it comes to data processing, I think there are three very important things. How the data is getting processed, how the decision is being made. There are three ways which normally I would, imagine. The first one is the decision, is it being done on certain predefined criterion? If that is the case, then the regulation will become much more easy, because you will know that what are those criteria, and based on that the decision will be taken. The other one is, the choices are infinite and you give the flexibility to the tool to decide, that's where things become a little bit more complex. And when the output is thrown to the user, it would actually make sense, to have certain precautionary statements to say that, okay, this is the basis on which the decision has been taken, and you may like to exercise your intelligence before you make a decision. Third and the last is data is being processed jointly by human intervention as well as artificial intervention. In such a situation, I always like to make sure that the human intervention prevails and finally takes the decision, whatever data is being kind of processed. So I would say at a high level, these are the three things, through which I kind of like to, regulate.
Yeah, okay. I think this is one critical point. What Pulkit mentioned is that first is and foremost for any AI to work is that our own database should be very, very clear, and we should have at all one place so the tool can run actually all the database. Because if all the internal database are not integrated, your input data may not be that good in terms of generate the right result. I think the point which he mentioned about the balancing the automation and human intervention. So maybe I'll go to the Ashish next. So how do you balance the automation with human judgment, and when it comes of making the finance-led decisions?
Yeah, sure, Anurag. So we are hearing in this session that a lot of things now will get replaced by the automation and the AI. And Mr. K.K. Mistry also suggested the future of AI, where a lot of things will now convert into the automation and a lot of things will be done by AI. I was also reading one article, and there was a very good saying in that article that what will be the future of AI? So currently in the organization, going forward, there will be 2 men in the organization, 1 dog and 1 man. And the job of man is to feed the dog, and the job of dog is to make sure that man doesn't touch the machines. Otherwise, everything will be done by the machine. So that will be the future of AI. But having said that a lot of things will get replaced by AI and a lot of things will get automated. But I can say that, and my understanding is that even though AI will do a lot of things, but AI will augment. They will not replace the human. At the end of the day, there are a lot of things which will be done by a human. So AI cannot fully replace the human. And we as a CFO should do the blend between the AI and the human. Because there are a lot of things which can be done by AI by using the automation. For example, there are a lot of technical stuff like reconciliation, bank reconciliation, preparation of the financials, doing the due diligence and making the balance sheets and all. But when it comes to the judgment, when it comes to the predictability, when it comes to taking decisions, it's human which comes into the place. And that's I observed by giving my personal example, where I am into the dual role. I am also the CFO, plus I am also heading the Europe sales. So I observe and I experience the blend of AI and human in my day-to-day activities. So my finance department is having an AI tool where they have a wonderful AR tool which is doing the predictive analysis, which take all the DSOs into the place, take the past trends of the customers and all, and on that basis, they give us the signals regarding the future recoverability of some particular customer, or whether the particular outstanding will go bad and all. So they gave such kind of signals for one of the customer, and then being CFO, they gave that report to me. But since I am also heading the sales, so I know the pulse of that customer, I know the nitty-gritty of that customer and the importance of that customer for the organization. And my sales team told me that we are also bidding for one of the important project for this customer. So then I applied the human approach, not only apply the AI approach given by my finance department, and then I had a discussion with the CEO of that company regarding the future prospects, regarding the how we can do the balance between our outstanding as well as getting the big business also in our future proposal. So that is the way I use the blend of both the things. So I think we need to have a balance between the AI and the automation and the human thing, where AI can augment, but they can't replace human.
Yeah, I think a very valid point, and it's very critical that the balance between any of you want to share the example of this balancing between human intervention and AI.
So I'm Hemant Jain, I'm CFO Reliance General Insurance. So a very good example, I think, given by our colleague. And being a general insurance company, we deal with a lot of claims, you know, and then we believe that we are able to automate so many things by using AI and all. But at the end of the day, we deal with our customers in a time when it's a very tough time for the customers, because we generally deal with customers at the time of the claim. Policies and all being sold by the intermediaries and all, but a direct interaction with the client happens at the time of the claim, and when it is a tough time for the person. So the point here is that we cannot use full technology at the time of the claim settlement. That is an area where, apart from using technology, we also deal with the client directly, and we see that how we can help. And all decisions we cannot totally depend on the technology, because like for an example, a health claim, each and every claim is a unique claim, and technology cannot give you a complete answer to a particular claim. So yes, technology can be a guide, but at the end of the day, we have to talk to customer, we have to really understand what exactly is the pain, what exactly has happened, and then accordingly the final decision always is taken by our people, not by the machines.
I think on this point, I have interesting insight to this. And United Health Group has a large knowledge center over here. And I know they have a team whose job is only to write a code, how to reject health claim. Which is, so we talked about ethical AI, I think, I was completely zapped. I said, what do you do? He said, we just make a code that, what are the things we need to find to reject a health claim? And we saw what happened in United Health Group case in New York. So I think it's very critical to balance it with the human intervention that's come to it. So I come to you, Kumar. I think you run a finance transformation practice for this. So maybe some insight on this, and maybe leading to the next question, where are you seeing the most benefit in terms of the finance-led AI projects?
Thanks, Anurag, for this question. See, value means different for different businesses, and the context has always to be contextualized to what it means for individual businesses. But if we were to generalize it, right, and we see three elements of where the value and outcome is being seen. One, autonomous processing and finance, where your transactional processes are getting tremendously automated, and that leads to three value creation. One is efficiency. How quickly you're able to transact a particular transaction, process a particular transaction. Second is effectiveness, is how important and how you're adding value to the overall process. And the third and most important is, in the age of mobile, how you are dealing with user experiences. And experiences is not only about internal, but it's also about your stakeholders, your vendors, customers, and your internal stakeholders. So that's what autonomous finance enables to do in terms of value. The other pieces that Anurag as well as Mr. Mistry talked about was, because all your processes are getting digital, your entire focus shifts from digitally enabling your corporate governance and risk management. There are enough risks with all these data, plethora of data coming into it. There's a huge impetus on risk management, the cybersecurity that comes in. So the corporate governance becomes the second most important value that digitally gets enabled. And last but not the least, with all this AI infusion coming into play, you improve your decision velocity in the organization. For example, all of us know about planning and budgeting. That's a very critical element that gets to be done. But given the influx of socio-economic influences, geopolitical risks, how quickly you can move and pivot to your event-based planning, because that impacts your capital planning, capital allocation, how quickly you are able to reorient this. I think that's the three areas and where we are seeing in terms of value getting created through automation and digitalization.
Okay, I think as Gaurav mentioned is that I think in all this, one thing which is emerging clearly is that how the finance team, how you prepare the finance teams to actually adopt these changes. So I come to Veejay, to you, is that how are you preparing the finance team to shift toward the digital maturity and AI-enabled leadership?
So I think, AI started quite 6, 7 years back, slowly and steadily, making an impact to lives of us, both positive and negative. Now, when I say negative, I think we've been using AI in the organization as a Hindi term, Atanki Insan. It's like a nuclear bomb, right? Because we should not shy away with the fact that a person who was preparing bank reconciliation and his only job was to prepare a bank reconciliation will no longer be needed because an AI is doing it. Similarly, one who is preparing the balance sheet P&L, AI can do that. With all those adjustments that is needed, there will be one person who's actually going to do those adjustments as per the accounting standards. The fact is that, AI is taking away jobs, which means that what those guys going to do, the one who's only preparing a bank reconciliation or a financial statement or analysis report, which is used by FP&A and another team, what would these guys do at the end of the day? That analysis and that reconciliation in terms of, okay, this is what I was doing, this is currently being done by AI, I am not required in the organization, what needs to be done next is to upskill. And that's what, we've been doing. Nobody want to, hold a cost in the P&L where the cost of AI is already been captured in. So we let go those people in the organization. As he rightly mentioned, there is a value proposition in when an AI is introduced. It reduces time of getting the data. It gives the data in the format in which we can, actually make a decision, and it empowers those people to think differently. Be a business partner. Don't be a scorekeepers. Now AI has become scorekeepers. They will keep the scores. You need to, co-lead the business with the business guys to make sure that what value you are, putting on the table. I think that those AI-led leadership is something that I keep on telling the team. The fact remains is that we at CMG, we have invested in various companies in India, outside India. Their finances, like I've been, historically a CFO, now running the company as the CEO. I manage most of the, finance of these, IoT companies, technology companies, just to tell them that, boss, I have that AI-led support, which gives me a data in a format in which a CFO can take a decision. So I happen to wear the hat of both CEO and CFO, thanks to AI, because it makes me, give that comfort in terms of data. So educating the finance team to, make that change in their perspective about how they look at AI is something that we need to, do it, which we have done it, and that's the reason we have downsized the team, making it more efficient. And it is actually working. It is working for the company in terms of how the deliverables have started coming in. Our guys have started, thinking so differently. It started thinking like an entrepreneur, started, delivering in a most cost-efficient manner, making the revenue go up and reducing the cost.
I think interesting. So I think again it's coming back to, and I go back to what Anurag said at the beginning, is the chief future officer. And as the data also suggests that a lot of CFOs then tend to become the CEOs, I think. And so AI actually enables us to actually take a lead role, actually most of the CFOs, and do more as a strategy play with the back of the good data analytics, which can be much faster through AI tools. I think on this, Pratik, on the team side, I go to you, and then, so how do you manage that for the adoption of AI within your team and to make them comfortable with the AI tools?
Okay. First of all, regarding AI adoption, we need to first, it's a mix of educations. In our company, within a team, we have to educate, and we have to hands-on support, and we have to some cultural shift, change we have to develop, so that we are more training, more awareness regarding the AI tools, and what are the benefits and what are the things we can do for the using of AI. Basically, we are implemented. We have taking different workshops and sessions, and we have do some contents and training sessions we are doing in our organizations. And AI is, Vijay said that AI is more probably have it's not Atanki words. We can use AI as a powerful collaborator because for in finance we are the strategic and we are the financial discipline. We are taking once the data we have to extract and we report to the higher side. And so I think AI is the powerful collaborator and also support us for the new real-time insights and also give us the more strategic and more powerful analysis by using the AI. And secondly, I can say as a CFO, we are the strategic thinker and we have a PPT. So my definition for PPT is using as a people, process and transformation. So I think this need we have a digital transformation and as a AI, if you can see the next future of the AI, it's a global stage and everyone is using the AI as a collaborator and as a digital transformation.
So, Kumar, I think since you from the EY side and you implement these into the many companies, how do you see, you would have an experience of how you see the adoption and making people on upskilling there and they're making them comfortable use of AI. So maybe some insights from you.
Interesting topic, Anurag. We'll just give you some statistics around, right? India in totality, the investments in finance technologies have increased by significantly to about 35 to 40% to what it used to be. But their efficiency and effectiveness metrics, as we were talking about, has increased only by 2%. So the adoption is the single biggest challenge that comes into play. And I appreciate Veejay's point to say that jobs are getting impacted. So how do you make that comfort of that what is in for me as an example? If I'm processing, if I'm doing a bank reconciliation, if my job gets automated, then what is in for me? Otherwise, that human element of insecurity comes in, and because of which they say there are 100 reasons to say why a technology will not work. So I think the fundamental piece that when we drive these technology adoptions, and most of our programs that we are doing across clients is now focusing on how do we drive this change and imbibe that adoption into it. Because there is an ROI that gets invested. Organizations are investing in technologies, but if they don't get value in return, be it in terms of efficiency, etc., that becomes a biggest bottleneck. And then you continue to be in these processes. If you just look into the spectrum of all the finance leading organizations, yes, they do have technologies. Very simple example is invoice processing, right? Everyone does invoice processing. Still, you have significant people in invoice processing. Given the influx of digital in GST network, we see matrices moving in from 60% OCR accuracy to 95% OCR accuracy. So actually, there are organizations who don't have AP processors in the organization. What they do is they focus on effectiveness and experience. So to your point, how do we drive adoption is more about understanding what is in for the client, for the respective individuals who are getting impacted for it. And how do they see their career movement upwards? Because as a finance professional, I'm sure everyone aspires. We start off from operations, and then we move on to strategic enabler and strategic value, FP&A or business strategy, etc. So how do I see my role getting influenced is the biggest single contributor. And obviously, whatever use cases is being defined as a part of the program, whether it is getting delivered or not. Because ultimately, even organizations have an hawkish view. If I'm implementing AI or automation in a project, if it is not working the way I'm intended to do, then I will be a deterrent to it. So I think it's all about the human element of what is in for me at each levels, be it processor, senior management, or the CFO or the CEO, right? So that's, I think, important element where we are focusing on what we call as WIP. I know I'm using a jargon in here, but what is in for me, I think that's an important element that drives adoption across processes.
Yeah, I think.
Since we're talking of change, is it working? Can you hear me?
Yeah, it's working.
Okay, fine, thanks. But since we're talking of change, I wanted to kind of call out one thing that, change is of course a very difficult, thing for anyone. But I don't think there is anyone here on this dais as well as in the room who gets up in the morning and says, I don't want to change. I'll be what I am. Maybe, some days you get that feeling, but 99% of the time will say, no, I want to do something better today. I think the same logic I would also apply to the organization and whatever change you want to drive on. The topic is of driving, say, digital adoption. I think most of the people resist when you say, actually, this is how I want you to change. So what is important is, and this is what I like to practice. The first thing is, I think our vision should be clear, and what you just mentioned, that what do we really want to do? What are our priorities? So if you want to drive digital transformation or use of technology, what are 3 areas? So one is, of course, efficiency. That's the first thing that comes to our mind. Second thing, which probably as CFOs, maybe we don't talk much about it, how I can actually improve customer experience and also drive growth in sales. Maybe that could be a second thing to talk about. Third is, of course, better decision making, better awareness of the risk around. So I think it's important to actually tell, okay, these are the 3 things which are important for me. And now, please, are you with me? Now go and tell me, come back a week later and tell me these 3 areas, what all things can we do. And the other thing that I like to practice is leading by example. Now, leading by example, again, is a very misused word, but again, I try to do very simple things. Is when I am, so again, within efficiency or better decision making, my simple message is we are not using spreadsheets. We have certain digital tools. So in some of the meetings, I had to actually go and tell, look, I'm not doing the meeting if we are using spreadsheet. I would actually personally log in and say, okay, can we not take a look at something which we have already established? Let's enter our comments into this tool so that it's visible to everyone. It's democratized, And likewise, there are so many things. And if I talk a little bit, go off the finance topics, we have, of course, many people who work in different shifts. And there are also a diversity employees who work. And, one of the concern areas for us was that, who is leaving beyond, say, office hours. Even, that piece we have digitized to say that, okay, that information will go to the manager the moment someone is checking out, so that someone is taking responsibility of why someone is, leaving beyond, the working hours. So I just wanted to kind of tell you, I think this has to be driven by the management, and the accountability has to be across the organization to drive that change.
Good. So, Hemant, I come back to you. Is that from financial services sector? I think and especially in your area and financial services, how are you using the tools to manage the risk in terms of the predictability of the risk?
Yeah. So we are again. So in financial services, I think predictive analytics is something which is very, very important in today's time, considering the fact that the things are changing at a very fast pace. And there are 2 critical elements here. One is that good that we have adopted technology many years before, and then we have a lot of data which is available to us. So on the basis of historical trends, a lot of things can be done. And at the same time, the external environment is quite, dynamic. The things are changing at a very speedy manner. And apart from that, the customer behavior and the customer expectations has also significantly changed. Now, each and every customer has a mobile phone. Any kind of product which we are offering to customer has an accessibility to look at the pricing point, as that what is the right price. So the days are gone now that earlier when in insurance industry, the pricing used to be on a particular product, like a same pricing to all the customers on a particular geography and all those things. Now it's not possible. I'll give you a very good example, like in case of the motor insurance. At some point of time when I joined the industry, there used to be a single rate. for the on-damage premium. Of course, the third-party rate are still regulated and regulatory driven, but in like an on-damage, we used to sell it at a particular price. And after that, the things started changing. We started offering some kind of discounts on the basis of the intermediary requirement, not on the basis of the customer's requirements. Then a few years before, some products came like pay-as-you-drive kind of things, that the number of kilometers you drive and then accordingly the premium will be charged. But now, pay how you drive are the concept which is now coming. So the customer's behavior is impacting the pricing point, and each and every customer is unique, whether it is the number of kilometers he is running, the geography in which he is kind of thing. There are so many factors which impact pricing and profitability of the portfolio. So the pricing is a very, very important element because we run more than 300 kind of products. In different geographies, we sell it through different channels, and every channel's behavior in terms of the claims experience is different. So now that's one area, that pricing is one area where we use predictability, and then we built into our rule engines where we issue the policies to the customers, because we have to issue the policy to the customers on the go. We do not have the time that customer will fill the proposal form, our underwriters will sit, will understand, and will give the pricing. Those are not the days. Now instant, using the technology, a customer can get an instant policy, but from a customer to customer, the pricing point could be different. That's one area. Now in case of claims, the predictability of the claims is very important, very critical. From a fraud point of view, because still in general insurance sector, you will not believe that there are about 10 to 15% claims we got on a fraudulent basis. And we have to really understand them, and we cannot penalize our good customers on account of those 10 to 15% our customers. So we have to be very sharp in identifying those frauds on the go, and then accordingly we have to build a lot of triggers in our systems, in our processes, so that we can identify them. So claims is another critical area. In finance processes also, that we have built instead of having a fixed annual budgeting kind of activity, now we have moved to a rolling forecast kind of things, where we continuously change our model and continuously see that what are all the decisions which we need to change, because the things are changing at a very fast pace. So we have to continuously evolve new and new things in our business models, so that at no point we unnecessarily get into a trouble from a profitability point of view. We run so many segments, so many intermediaries, and pricing is dynamic. The claims atmosphere, claims behavior is changing of the people. So that's one area. On reserving side, similarly on investment side, any dip in the interest rate scenarios, investments is a very big for insurance companies, because whatever the premium which we are collecting, everything is going and sitting into our investment book, and from there we are settling claims and spending our monies. So for some point of time we manage those investment books, and the predictability of the investment scenario is very critical, and accordingly our P&L have a significant impact on that. So that's one area. So in financial services, I think for company like of our size, we are 6th in private sector general insurance company, and in terms of the volume, we issue almost 15 million policies in a year, and we settle almost 5,000 claims every day. Now that is the volume which we handle. In that kind of the volume, and when fairly we have to take our decision instantly, the role of AI is very, very critical in our business processes. I will not say that we have achieved a significant AI-enabled environment. We are still looking into it. We are still on our journey to achieve these kind of things. But yes, from an earlier time when we used to call automation, now we are moving into the generative AI thing, so that our decision making and everything can be very fast, can be very accurate, and we can work on dynamic environment in a very efficient manner.
Thanks, Hemant, for the detailed explanation. And we can use, I think, the way we can use the AI. Thank you so much.